Good morning, folks. Welcome to another edition of the Satori Traders Market Pulse. So this morning, I'm just sharing with you a few of the teasers from our ongoing study of the global debt situation. Obviously, this is focused on China and the real estate property development situation in that country. Got some new information coming out or some new hints. It's looking like the government may do some kind of backdoor bailout of this, however you pronounce this. This is another real estate developer in China. They happen to have this bond coming due on the 13th and an interest payment on the 13th being due. And so we'll get some new information here 2 days from now to see how that gets handled, the bond payment and the interest payment. So just so we understand why we're interested in this debt situation, obviously what set us down the path was looking at the chart of the yield of the 10-year U.S. Treasury note, and obviously it's trying to rise right now, rise significantly and impulsively. And so we're trying to understand why that is occurring. And so if we talk about Chinese real estate as a sector, it is the largest, or it is believed to be the largest asset class in the world, 50 plus trillion. I've seen it as high, I've seen people show that number as high as 62 trillion. One of the unique things about Chinese real estate and the Chinese culture, evidently they view real estate as savings, which, I guess to some extent we do as Americans as well. But what has evolved evidently in China over the last 20 years with a real estate boom and, just an overall economic boom in China in particular, a newly rising middle class with money to invest, they've chosen to invest in new condos with the emphasis on new. And so, you can't rent a new condo because then it becomes a used condo. And so evidently there's this class of vacant investment condos in China that is viewed as savings by the population. And so anyway, that's just it's an interesting thing for me to wrap my mind around, and it's something we need to keep in mind as we study this situation. Another important factor, so the sales of new condos down 38%. So not only do we have a whole bunch of vacant condos sitting there, savings, air quotes around savings, and now we have the sales of new condos slowing down. Evergrande, that's the focus of this study, is Evergrande. They seem to be the sharp, the spear, the sharp tip of the spear in the debt situation. They, whether you want to call that a distinction or not, they don't get a gold star for being the most indebted real estate developer on planet Earth, but evidently that's what they are. $300 billion worth of debt acknowledged on the books. There are hints not only about Evergrande, but all of the Chinese real estate developers that there are off-book debt obligations, handshake deals, etc., that are coming to light as these companies come under pressure, financial pressure. And so we talked about the upcoming bond and interest payments. Let's roll into the charts. Here we have gold in the daily time frame, and gold is doing quite well, showing some strength. We have stochastics, energy turning up. MACD in this time frame in gold remains in the bull mode, which suggests that the primary trend right now is upwards. We're still on a sell signal, but MACD histogram, the red and then the light red, is hinting at potentially a new MACD buy signal in the next couple of days. The price action, and of course that's what matters the most. We can see that prices, it's got a fair amount, not a fair amount, it's got a lot of headwind overhead, however you want to look at that. A lot of resistance overhead with the moving averages, median line of the shift pitchfork. We've got this support resistance zone to work through. So anyway, a lot of overhead resistance for gold to work through. but some nice action coming out of the recent correction. So silver, same story, pretty much same story. Got a nice uptrend starting, potential uptrend starting, but running into overhead resistance, 20-day moving average, median line of that shift pitchfork. MACD in this case is in bear mode, which would suggest that the primary trend in silver in the daily time frame is downwards. But we'd also have to acknowledge that silver is very volatile. And so, we might give a lessened importance to that indicator in this particular investment vehicle. Energy potentially turning up from a low level, mining stocks, not expecting much out of them until the metals do something decisive. The dollar, I wanted to look at the dollar in the weekly time frame this morning. And so we can see, we looked at this MACD as a potential prior highs and lows in MACD acting as bounders or limiters. And we can see here in the weekly time frame of the dollar that MACD surpassed that prior high, but then, also ran out of energy not long after, MACD pushed up above this level, and then price rolled over. So, as far as looking at MACD as an indicator of overbought, oversold, I would suggest that that's a worthwhile thing to look at, because it would appear to me MACD reached an overbought level and price rolled over subsequent to that. So, energy is still elevated. Sideways correction going on right now, just kind of bumping sideways. Obviously, the median line of this Andrews pitchfork is acting as a resistance level. If we look at dollar in the daily time frame, just, sideways bumping, maybe some bottoming action in the MACD. Interest rates, this is the weekly time frame yield on the 10-year note. So far, just I won't call it a continuation this morning, because we have this doji. If we wanted to describe this week's candle at this point, we'd call that a doji. But we've today and 3 more trading days after today before we can determine what that candle's going to look like. Very high energy, impulsive candle last week. In the daily time frame, we can see that price, or the yield, has reached the upper median line of this shift pitchfork and appears to be rolling over. Coincidentally, MACD has reached this level of overboughtness that stopped the last rally or rise in interest rates. Energy very elevated. So we'll see what the day holds for the 10-year note. Bitcoin, nothing new from yesterday. Ongoing weakness, potentially, stochastics hinting at maybe we've bottomed on energy and ready for a rise. I was looking at volume this morning and noticed that on a positive note, we didn't get a big burst of selling, and by a big burst, I mean, a big volume bar like that, big volume bar like that. And so we have not had a capitulation down into this support level, which could be viewed as a positive. It's like, okay, the people who are long this market are holding on to it. They are not selling. They're ready for the next rise, assuming that that's what comes next. The potential downside of that observation is that we have not had a capitulation yet, which means potentially there's another bout of selling to wash out the weak hands in this market. But, time will tell. Equity markets, this was looking this morning. We've got price consolidating below the 50-day moving average at this point. Overhead resistance with both the 50 and the 20 median line of that modified shift pitchfork. Energy is mid-range. MACD on a sell signal. So not very exciting in the SPX. Dow is doing a pullback, continuing a pullback yesterday, potential support at the 50-day moving average. MACD sell signal, energy declining, so Dow not a happy camper. Potential support here along the median line of this modified shift pitchfork. That spike low appears to have found support above the median line. We'll see what happens today. And then as I was looking at the NASDAQ this morning, I was noticing this caught my eye. In Andrew's pitchforks, there are 5 rules for using the pitchforks. And so one of them is called zoom and retest. And so this Andrew's pitchfork in the NASDAQ, I believe, is valid. And so we can see that price has done, exactly what Dr. Andrews told us it would do about 70% of the time. Price is going to reach the median line of that Andrews pitchfork, and then it will do one of several things. One of them is a zoom and retest. And so what we get is a zoom through the median line, which in this case is to the downside, and then we get a retest. And so that, I believe, is what's going on right now, or what could be going on right now is a retest of that resistance level, both from the Andrews pitchfork, that's primary observation, and then coincidentally, that's a support resistance zone. So, and folks, I got to run. Have a fantastic day today, and I will talk to you soon.